The morning session on the Moscow Stock Exchange on October 16 began with a further fall in the ruble, despite the recently passed decree of the dictator of the Russian Federation, Vladimir Putin, which establishes the obligation for exporters to place at least 80% of their foreign exchange earnings with Russian banks and sell at least 90% of this amount on the domestic market. The ruble continues to lose ground against major global currencies, even with some demand for foreign currency and an increase in oil prices after the close of trade last Friday. At the beginning of trading, the dollar-ruble pair was valued at 97.44, which meant that the ruble fell by 0.2%. The EUR-RUB pair started the day at 102.69, which meant that the ruble lost 0.5% of its value. Note that on October 11, it was announced that Putin had signed a decree on the mandatory sale of foreign exchange earnings by certain large exporters in order to stabilize the ruble exchange rate. Already on October 12, the dollar-ruble pair reached 96.46 rubles per dollar, marking the highest level since September 27. On this day, the ruble strengthened by 3.3% compared to the previous day, before the decree was adopted. The euro-ruble pair was then valued at 102.81, which indicated an increase in the value of the ruble by 3.5%. It was also the highest since September 29. However, experts, despite the temporary impact of Putin's decree, were not convinced that the mandatory sale of foreign exchange revenue would further radically affect the ruble exchange rate. On October 13, the value of the Russian ruble began to fall during the main stock market trading. Meanwhile, oil prices rose on October 13 after the US stepped up its sanctions program against Russian crude exports, raising concerns about further supply. Russia is now expecting a significant inflow of foreign currency into the domestic market thanks to the record volume of Russian oil exports in September, which the International Energy Agency, IEA, estimated at $18.8 billion.